Hello, everyone. I'm here with some of my favorite educators, content creators, and financial emancipators for the Halloween special, October edition of ETC Talk. That's ETC Talk Episode 3, where we collaborate every month to provide key updates, discuss the biggest issues facing Ethereum Classic, and answer your questions. You're in for a treat tonight with a packed panel, so before we get into the core substantive part of the show, we should all introduce ourselves and tell the audience where to find our content. Angel, why don't you go first?
How's it going, fellow viewers? I am Savage Profits, and you can find me on Twitter at Savage Profits, as well as my YouTube channel, Savage Profits. Everything is simple and to date. Next.
Hi guys, my name's Cal. I am on YouTube as Financial Journey.
I am Donald McIntyre, founder of Etherplan. You can find it on etherplan.com, and on YouTube it's Etherplan.
Hello, everyone. My name is Selorm. On YouTube, I am Patient Money, and I've taken a little bit of a break, but I'm coming back with a bang, so stay tuned.
Awesome. And as for me, my name is Peter Cordi, and it's really awesome to get to collaborate with these guys on the screen here. I watch all of their videos, and you should too, and I take a lot of inspiration from the people on this very panel in my own videos. Speaking of which, you might be watching this on my channel, so if you do, you already know where to subscribe. But if you're watching elsewhere, you can find me by searching my name, Peter Cordi, and you can check out my videos on Ethereum Classic and other topics. We actually just launched 2 ETC Punks NFT giveaways, so check out my last video for details on that. But now that you have a better idea of who we are, feel free to shoot a comment down below and check in. Let us know you're here watching, where you're watching from, and what you're most interested in hearing us talk about. The first thing I'd like to do is get one of those classic Savage Profits ETC price updates. If you watch his channel, Savage Profits is easily the best at turnaround time. Something can happen, and it feels like 5 minutes later, he already knows what's going on, and he has a whole video with the inside scoop on it. So, Angel, talk to us about what's happening with ETC right now after it just shot up like 6% yesterday out of nowhere while the market remains stagnant, and now it's kind of back to where it was before that.
Let me go ahead and share my screen. Let me see if you can see it.
Yes.
Looks good.
All right, perfect. So yesterday we got a little tease of what Ethereum Classic could do, but it ended up being a classic bull trap here. As you can see, we shot up from these $53 price points way up to this $58. And I apologize for the individuals who ended up buying at this high and ended up getting psyched out. But it seems there was a lot of short orders there, which is why the liquidations are showing that $1.5 million of longs ended up getting liquidated and handed over to the shorts pockets. So regardless of that massive jump, it seems the bears ended up winning that fight, which brought the overall price down. Now, sad to say, since our majority of our market share and volume comes from South Korea, since this happened at 10 p.m. Eastern, we didn't have enough bullish momentum to sustain those levels, which is why we're sitting at these $54 price points right now. But it's not necessarily a bad thing. It just goes to show how fast volume could pick up for Ethereum Classic. As a prime example, we're now sitting at $1.7 billion in volume. And even though a majority of that volume is on the negative sentiment and on the bearish side, this volume could easily turn around and become bullish very, very quickly, as we are sitting at a $7 billion comfortable market cap at the moment. Now, I know a lot of individuals are tired of seeing Ethereum Classic right now at $50, but there is a lot of people as well who have been holding their guts and their mites, and we have been seeing it as a lot more hodlers have been coming to Ethereum Classic. The only reason we're at 50 is because there's more individuals holding this coin. If not, we would have been sitting at the $40 and $30 price point levels. Now, is that some expectation that this massive rally is going to come in November and December? Well, history does end up repeating them itself. And since Ethereum Classic has only been through one of Bitcoin's halving cycle, we're going through that history there. And it always ends the year higher on each halving cycle. Last halving cycle, we saw it rally up to $48 price points from its $11 price point levels. So imagine how high it could rally from these $50 price point levels. To me, it's going to be like a trampoline, or it just bounces off of these 50s and 4 to 5x's from there. Now, one last thing I wanted to mention is that not a lot of people mention this, but if we compare Ethereum Classic to a project like Cardano, not saying Cardano is a bad project or anything, but currently Ethereum Classic has more active projects than Cardano. But look at Cardano's market cap compared to Ethereum Classic's market cap. Now, the price is decided off of supply and demand, but what drives demand for Cardano? It's simply expectations. They're expecting Cardano to do this and that, implementing a treasury, to be this amazing smart contract platform for DeFi. But all of these lately have been empty promises that keep getting pushed back by Charles. Ethereum Classic, on the other hand, is as blunt as it gets. Why is it going to continue rising in price? Because crypto is gaining adoption, and each halving cycle we seem to be ending the year higher than the previous. So as of that, that's just the update I wanted to mention for today. So let's see if Financial Journey could take over with some technicals on Ethereum Classic.
Yeah, for sure. Financial Journey. I know last week you missed ETC talk for soccer, and I actually want to ask you about that in a second. But what we didn't get to hear from you was your price outlook for this market cycle. And that's really important because I'm sure a lot of our viewers might not have seen last episode. So first of all, I would love to know, what position do you play in soccer? Are you playing recreationally, semi-pro, or something else? And then I would love it if you can get into your price outlook for 2021, 2022, the rest of this cycle.
Okay. Yeah, big fan in soccer. I actually played D. It's Division 1, so it's pretty competitive for where I live. But yeah, it's fun. I definitely big fan of it. As far as predictions, did you want me to share my screen or just go over?
Yeah, go ahead.
Okay, so hopefully you can see me. Yes, I think.
See you. I don't see your screen though.
Oh.
I'm waiting on it to pop up so I could. Oh, there it is.
Okay, so as you can see right here, I have through Binance, just the basic chart. It's been, I heavily rely, especially on crypto, on the momentum indicator and kind of the moving averages. It's good to know what the MACD and RSI and other indicators do show, but typically those are what I rely on. So at the end of the day, I ultimately look at the total volume, which Savage Profits did mention, because if you pair that with the momentum, you can kind of piece together whether it's big whales getting into whatever like crypto you're looking at, or if it's just a lot of individual small retailers. But ultimately, in combination with the actual moving averages, ultimately how it's just been suppressed for quite some time. And as Savage did mention, it will just need one or two, because unfortunately, there's been a lot of external things that are kind of suppressing ETC, in my opinion, such as obviously the Bitcoin rally, especially with opportunity cost. People are just seeking going to higher yield cryptos, such as Bitcoin, that rally, and now altcoins are going through the roof. So as of right now, that's why ETC has been kind of suppressed for quite some time. But once that does deflate those rallies, people will go and rush back into ETC, and that will, in my opinion, be a huge catalyst causing massive rally. So as far as on this goes, just going to move to the 1 week. You can see as far as the outliers is typically around the $72 range to 65. That's when there's a lot of resistance. We do need to break past that. And then in reality, like I said, it's just one of those big catalysts that just need a little bit, like you need capital to come into whatever you're looking at, right? And in order to push it higher. So at the end of the day, we just need to break past these resistance levels, whether it just be some external factors, some more companies using ETC or either an ETF or something along those lines to push it past these resistance levels. And then we'll get to kind of similar scenarios, what happened like a trampoline. But as you can see, especially on the momentum indicator, it's been pretty stagnant. So as far as the number of buyers, this has been pretty quiet. So ultimately, at the end, I do see by the end of the year, by 2021, most likely around the $80 range, possibly a little bit higher. Again, I do see the altcoins probably going up until end of November, most likely. As far as a 2022 prediction, I'd see us closer to around the $5,000 to $1,000 range, again, depending on how things progress, especially with Bitcoin being kind of the leader and it not really working too well for El Salvador. I do feel a lot of different external factors need to go positively for crypto in order for us to get to those levels. So that's why 500 to 1,000. And I apologize for me ranting, but yeah, that's pretty much my predictions.
No, that's great. I totally concur with a lot of that, actually. And also going back to one point that Savage Profits made about Cardano, I actually also liked that one as well, because I've always said this about ETC. We're the opposite of a hype coin here. Like ETC is like negative hype. There's actually, if there's any hype, it's
boring coin.
It's boring. It's unscalable. It's, got this negative image. It's all of ETC's success and rise has more to do with the principles, the fundamentals, and the technology behind Bitcoin, and a lot less to do with people pumping it like, a doggy at meme. You know what I mean? Like Dogecoin or Shiba Inu or anything like that. But for anyone who is just joining us right now, thank you for joining us. We are only getting started. So far we've introduced ourselves. Angel's given a price update. Cal gave his price outlook for this cycle. But now I want to get a roundtable discussion going before we hopefully get Mike the investor in here. I hope he joins us. But if not, that's fine. We have plenty of stuff to discuss otherwise. So recently, and this was just touched on, the very first Bitcoin futures ETF was just approved to be traded on the New York Stock Exchange, sending Bitcoin past its all-time high, while Ethereum retested and broke its own. Yet coins like ETC, Litecoin, and Doge sit nowhere near their all-time highs. Interestingly, Grayscale has begun the process to convert their Bitcoin fund into a spot ETF, actually backed by Bitcoin, and they can do the same with their Ethereum Classic fund, which is their third largest ETF convertible SEC reporting fund. So let's go around the metaphorical table and get everyone's opinions on this and how it will impact Ethereum Classic going forward. Sorry, guys.
So it seems Australia seems to be getting a spot ETF approval before us. Now, if Ethereum Classic does end up getting like a futures ETF approval in some sort of sense, futures ETF doesn't really affect the price as much, but it would give it the hype that we need and the media attention to push those prices forward. But since futures isn't backed by the actual coin, it doesn't directly have an impact. Now, what we need is a spot ETF, and Grayscale is trying to give us that spot ETF. But it seems the SEC is giving them a difficult time doing so, as they can't even get their Bitcoin ETF approved. But definitely it seems like they're holding off because there might be some sort of outside factors. Maybe the whales just want some more coins before this massive ETF is approved. But once it is approved, which I see happening before year's end, before December 31st, we will see some massive rallies for Bitcoin, which will ultimately carry the rest of these altcoins, being Ethereum Classic, Litecoin, Bitcoin Cash, and Ethereum, which are the next ETFs that are quote unquote set to be approved by Grayscale's ETF. Next. Sorry, I can't hear anybody.
Calum.
Okay.
Oh, geez. How did that happen? Yeah, we all got muted. I probably did that.
I think it's you, Donald, possibly.
But for me, the ETF product is on one side excellent because it's a new channel for a broader public to access crypto, no? Bitcoin, Ethereum, then Ethereum Classic, etc. I agree with Savage that the futures ETF is not such a direct product because you have the ETF product that trades in the New York Stock Exchange or the NASDAQ, depending which one it is. And then depending on the supply and demand, people buy the people who cover those funds. They buy and sell futures, which is not directly the coin, and then to hedge their futures positions, they go and buy and sell the coins in the spot price. So maybe when somebody buys one Bitcoin through the ETF, it ends up being 1/3 of a Bitcoin in the spot market. But if Grayscale goes ahead and the SEC approves ETFs for the cash market spot ETFs for Bitcoin, that's going to be amazing for Bitcoin, and then Ethereum, because that's the second most popular one. And then it is very possible that the third one is going to be Ethereum Classic, or maybe they approve them at the same time, because if they approve one, I don't see why they wouldn't approve the other. So Ethereum Classic could perfectly be the third one, because that's their largest fund by Grayscale. And again, I talk to many people about how they can start opening their first account and buying their first crypto, and I tell them about Bitcoin, Ethereum Classic. I tell them about my passion about Ethereum Classic, but many of them don't go directly to Coinbase or Binance and they open an account and they send money and they buy the crypto directly. Many of them buy GBTC, for example. So there is a large stock of a pool of money outside of crypto still that could come in through ETFs. So I think that would be very positive.
And actually, to touch on that point, in my opinion, I think the ETF factor is kind of what you mentioned. It'll bring in a whole new rush of capital and kind of bring a lot more interest into crypto. Because I think ultimately, at the end of the day, crypto just needs a little bit more integration within the day-to-day economy and things like that. And despite the huge kind of amount of popularity in crypto, there's still a lot of individuals not in it. But yet they do investments such as stocks. So I think those ETFs will at least bring in a lot more interest in crypto in general. And I think that alone will speak volumes and definitely bring in a lot more liquidity as well. Definitely very much needed.
Yeah.
And Patient Money?
You're
All right.
muted.
So yes, Donald and Calum, you guys pretty much said everything. But again, it is the awareness that matters, right? Somebody tweeted yesterday that if everyone was aware of Bitcoin, if everyone understood how Bitcoin operates and works, Bitcoin would be $1 million, right? So again, we're all still very early. And anything that makes it easy for other people to invest, even if it's just a little bit, it's just a beginning. They have to dip their toes in the water. So, yeah.
Yeah, I just recently made like a 5-minute video about this, and I know Savage Profits did as well. So if you guys want to check those out, they're pretty informative. But overall, I agree with what everyone had to say, and I think everyone covered it pretty well. I think it's important to note that the market moves based on investor hype and confidence. Like the market literally represents psychology of the human mind. So while an ETF doesn't actually make Bitcoin any more or any less sound money, which it is, it does impact the way investors look at the coin, especially boomers who would be buying the ETF as opposed to the real coin. And not to say that in a derogatory way, but the same goes for Ethereum Classic, which has some of the most institutional adoption out of any cryptocurrency out there. And I think, and I could be wrong, but I think it's safe to say that Bitcoin will be the only crypto getting an ETF in America this market cycle. I don't know if you guys agree with me on that, but that's my opinion. But by the next bull cycle, 4 or 5 years from now, I would be surprised if there weren't at least 2 other coins with an ETF. And one of those coins, I think, would be Ethereum Classic. But this is supposed to be the part of the show where we get Mike the Investor on and we talk about all the stuff that we were going to talk about or that we spoke about in the first 2 shows to get him caught up. But he unfortunately has not made it yet. But you know what? If he does show up, he will be added to the show immediately. So let's just get right into what we were going to get into after that. So that makes Patient Money be at bat. Okay, so before we get to another roundtable discussion, let's give Patient Money the floor because he actually hosted the first 2 ETC shows and did an awesome job. But when I think of Patient Money, so many memories come to mind where he pointed out some random fact that completely like changed my mind, changed my view on where the market was headed. So we had Savage Profits give a price update earlier. We had Cal give a price prediction earlier. But can you provide some more context to the market to give us a better understanding of the current situation?
All right, thank you. So I'm going to address a question that was asked earlier, I think by Brandon. He was talking about another cryptocurrency influencer on YouTube, very large one at that, with 500,000 subscribers, very loyal, and he spoke about ETC yesterday, and these were his exact words. When somebody asked about ETC, he says, "ETC, that coin gets 51% of tax every other week or so." Right? That's exactly what he said. I'm not making this up. And he also went on to say, I think Coca-Cola actually put that in the comments. Do you think you can find a comment out there? So again, he has a lot of followers who follow him and are very loyal. And if such a person with that level of impact in the community doesn't understand anything about ETC, that's a great opportunity for us. It puts us in a very good position, right? He probably doesn't know anything about SHA-3, probably doesn't know how SHA-3 will work. He doesn't know about the possibilities ahead. And they are the ones that will eventually be like, oh, what happened? How did ETC go from here to here? And so again, all those things put us in a very good position. So again, let's talk about SHA-3. So SHA-3 hashing algorithm is one of the most secure out there. It pretty much uses a sponge, something called a sponge construction, where the data is absorbed into a sponge and there is integration, there is permutation, all these math equations done to it, and then it's spat out the other way. And it's very, very, as of now, there's no way to hack it. So banks and other big institutions that are thinking about adopting a cryptocurrency are looking for a cryptocurrency with SHA-3 security, right? Bitcoin uses SHA-2, and that was the most secure at the time. So there is the possibility of, not that there is a possibility, it's in the works. It's possible once ETC moves on to SHA-3, it's just going to take the world by storm. It's just going to be overnight. And the same people who do not, research ETC, the last time there was an attack on ETC was August 2020, right? And ever since then, guess what? Just like he said, every other week they've been trying, but they've never been successful. And ETC has actually never been hacked. It's only been attacked. And those attacks are just, they get a lot of hashing power and then they lie about the transaction and they're able to reverse this, but it's getting harder and harder. Different things have been put in place, like MES and other things put in place for now to tie the system together. So I just believe that the more we have certain people in such positions push it down, the more time we have to accumulate. And then when things start happening and we start going towards Donald's price predictions, that's when FOMO will kick in and all those same people will come back and jump in. So again, it's all about understanding that cryptocurrency is here to stay. Cryptography is now offered at college, master's, PhD level. You can get a degree in cryptography, right? 12, 13 years ago, that it didn't even exist. So again, it's only going to get better and better from here. And since cryptography is a science, personally, I believe ETC should, focus on upgrading the hashing algorithm to be able to, deal with the infrastructure of the future, because it's only going to get more complex as time goes on. Let's say we have to be in a place to be ready to host something on the metaverse. I just have to put that in there.
Oh, that's awesome.
ETC4.
Exactly.
I wanted
Can I give an
to
update
input
about
on
SHA-3?
that. Oh, yeah, you go.
Yes, I'm
go
done.
for it.
Can I give an update about SHA-3?
Go ahead.
Please do.
If you go to the SHA-3 is ready today. Ethereum Classic has Hyperledger Base 2 and Core Geth. And in both clients, it's already, digamos, in the test clients, it's already installed, it's already implemented and integrated. And they've been testing it for 12 months, more or less. And everything has been successful and okay. And now there's a pull request. If you go to the Ethereum Classic GitHub organization, you're going to see in the pull request page, you're going to see that there's a pull request because now the devs want to test it in the real network, in ETC, for real life. So they want to fork ETC, the real network, to create a testnet that is as similar as possible to the real network. They're going to fork the mainnet just to test the two clients with SHA-3 there. I think that after that test, it may take a few months or 3-6 months. I think it's going to be finalized. So in terms of the product of SHA-3, it's practically ready to go, and both teams have collaborated very smoothly, etc., to do it, and they're going to test it practically in the mainnet, because they're going to fork the mainnet to test it. The only reason why it would be delayed a few months is to wait until Ethereum moves to Ethereum 2.0, so all the miners that use GPUs can come to ETC, and then when they are already working on ETC, we may change, we may upgrade to SHA-3. But I think there's a very high probability that SHA-3 is going to be implemented for ETC.
So let's actually, real quick, I just want, because we're on the subject, if you look at the comment on the screen, Hank Blue here says, SHA-3 will not protect ETC from 51% attacks. If an attacker gets a higher hash rate than the network then they can still attack the ETC network. So I'll let Donald address that because he's probably the most informed on SHA-3. But I think this person fails to realize that all proof of work blockchains can theoretically be 51% attacked. Everyone knows that.
Yes.
Proof of stake systems, networks have their own security holes, but this is how you defeat a proof of work, or try to. Here's the thing. The technological implementations we've already done, like ETC hash and MES, have made it virtually impossible, and SHA-3 is going to make it even harder to 51% attack ETC. So how the heck is it not going to protect ETC from 51% attacks if it's better than what we already have, and that's preventing it from attacks? But Donald, you go ahead.
Yes, the situation today of the mining in Ethereum Classic is that it's GPU mining with ETC hash, which is very similar to Ethash with Ethereum, and then it has MES, which basically when there's an attacking chain coming into the network, instead of just accepting it, the existing nodes require to that attacker to have 30 times or 100 times more work done to be able to accept it. So they don't need just half of that's the technical contribution of MES. So as it is today, Ethereum Classic is almost very secure, and like Selorm says, proof of work blockchains are attacked all the time, but they're not successful. And they haven't been successful in ETC for a very long time, for more than a year. So I think ETC is secure. The what you said also, and what the comment says, is absolutely true. Any proof of work blockchain, including Bitcoin and Ethereum, that are huge, if somebody has 51% of the hashing power, they can propose another chain or another block and do the double spend attack, which is what Selorm said, which is to not include a transaction that was sent in a previous block, and steal money from someone. So that's true, and that is the design. If the comment is meant to say ETC is going to continue to be attacked, but no, that's not the case, because it has MES, like you said. And also SHA-3 for the same investment in electricity and capital in machines has much higher, because it's more efficient, has much higher hash rate. And not only that, SHA-3 promotes or incentivizes the creation of professional miners, no, that use special machines that are called ASICs. So once ETC grows in price for miners, it's going to be more revenue. So more professional miners, like in Bitcoin, are going to come to ETC. And when you have professional miners, they have higher hash power, better machines, etc. And that is what prevents the 51% attack itself, no? But the 51% attack is possible, like in any proof of work blockchain.
Does anyone else have anything to add on that, on SHA-3 or the specific comment? No? Okay, yeah. Well, I got to be honest with you guys. I was up so late last night, and I was just seeing all those kind of comments, and I was like, oh, man, I really got to respond. And I was like, no, hold on. Talk tomorrow. I got to go to sleep. I got to host this thing. And second of all, we can answer them tomorrow, too. But it was tough. I'm like, oh, man, let me type up this long response. Let me like pull up these Etherplan articles. It's like, oh, you know what? Never mind. This is probably
that same comment could be done for Bitcoin. Yes, Bitcoin.
Another thing,
yeah,
our most recent 51 attack was in August, I believe, of 2020. And you could see the dashes on the network where it was at that time. Was it like 2 dashes, I believe, around that range?
Yeah, it was very low.
12x. We're almost 12x that current hashing power on the algorithm, so it's not a chance at the current moment. It'll be extremely expensive.
Impossible. Literally, I mean, like theoretically possible if all the billionaires wanted to combine their own money and pull it together just to attack this $7 billion asset Ethereum Classic, but I don't see that being very likely. So if you're still with us, thank you for sticking around. We have a lot more left to come. We'll do some more roundtable discussions. Donald will actually be giving a presentation on the Ethereum Classic gas system, which is so important, and we'll be taking your questions at the end. Let's start with a discussion for or on opportunities for projects and collaborations on Ethereum Classic. So ETC is listed on just about every major exchange, and actually it just got listed on another exchange last week. But one thing it lacks, not entirely, just compared to some other chains, is projects built on it. We just got our first NFT project built on ETC called ETC Punks, and I just made a video. Savage Profits just made a video. Check those out. Awesome videos. And I know Angel's video is awesome, by the way. He's so good at those. But what the guys over there told me in preparation for this video was that a lot of developers aren't even aware you can build on ETC. And one of the reasons they made ETC Punks was to show the world you can do it, not to mention the security and immutability factors as well. Mike the Investor made a great video a while back about Ethereum Classic's collaboration with Filecoin, and ETC has also collaborated with Chainlink as well. And with all that said, if you compare ETC's ecosystem to Ethereum's, the problem is there's still a huge difference in terms of DeFi projects and ERC20 tokens and everything else built on Ethereum. Talk to me about some of the opportunities Ethereum Classic has to improve on this, because Ethereum Classic can be everything Ethereum 1 is and more, because we have all the foresight to fix the problems that they ran into. So tell me about the opportunities ETC has to improve on this. What ideas do you guys have, and what would be a really cool project you'd like to see on Ethereum Classic?
I'll start off. First things first, what we need, ladies and gentlemen, is a meme coin. A meme coin needs to be built on Ethereum Classic to get the hype that we need, because Shiba has been taken off. And for those of you who don't know, Shiba is an ERC20 token built on Ethereum. So any hype for Ethereum, any hype for Shiba is pretty much hype for Ethereum as well. And currently there is a project called Classic Swap being built on Ethereum Classic. It's still behind the works, but I believe we definitely need that decentralized exchange, because if you ever tried a Uniswap, for an example, their fees are absolutely ridiculous. For buying like $20 worth of ETH, you'll spend $60, $70. And since our network isn't that congested, we have a great opportunity right now since our fees are currently low. Eventually, once we have massive development on Ethereum Classic, we may have some high congestions and some higher fees. But at the moment, it's currently a great opportunity for a lot of people who don't realize it.
Did we lose?
Yeah,
did we lose?
Calum.
We did. Okay. I'm sure he'll be back.
Maybe we got disconnected. We lost the internet.
No problem. All right. Well, Donald, do you want to go next?
Yes.
Great stuff, by the way.
I'm going to share my screen to talk about opportunities.
Sure.
This. Can you see my screen?
See it now. It's off the screen.
I think that what's happening now is amazing because all these proof of stake networks like Avalanche, Polkadot, Internet Computer, ICP, Sol, Solana, then Cardano, etc. They all have huge budgets and they're paying developers to come and build. So they do PR announcements every now and then to come. In the case of ETC, again, ETC is like Bitcoin. It's a boring network. It's about security. It's not scalable. But regardless of that, projects come organically, not because somebody paid them. They come for the principles and the security that the system provides. So ETC, for now, because of this history that it has and because of its profile, that it's a base layer blockchain that is meant to be secure and not for marketing gimmicks, it's going to be discovered with time as this base layer secure component of the whole stack. And many components of many applications are going to be built on ETC as the secure point, and also Bitcoin. So in that sense, it's very similar to Bitcoin. Bitcoin has everything built on top, and ETC is going to have many things on top. But in addition to having the currency like Bitcoin, it also has smart contracts at the base layer in its internal, highly secure environment. So again, with this concept that ETC, the first thing, I think that NFTs in ETC are very important. So ETC Punks is an excellent app to be like an example and as a test for future NFTs, because in the future you're gonna settle high value. For example, a building is going to be sold in New York, and that transaction is going to occur in a smart contract where when the money comes in, then the title of the building is going to change hands, and the title is going to be an NFT very likely, because NFT is a non-fungible object inside ETC that may represent that building. And the same thing with art, with buying and selling cars and stuff like that. And in the case of the car, the NFT is going to represent a Tesla, for example. And there's going to be another smart contract that is going to be a loan to buy the Tesla. So everything is going to be connected. And if the person doesn't pay the loan, then the NFT is removed from that owner, and it's given back to the dealer, stuff like that. So all of those lower layer, highly secure transactions are going to occur in Ethereum Classic, and in Ethereum 2, Cardano, Polkadot, etc. The other things. So if we understand this, ETC is very good for these 9 things that occur to me. And the opportunity for me is for financial advisors and everybody who's advising people to buy Bitcoin is to tell families to invest in individuals and families to invest in ETC because of the potential appreciation for trading, investing, financial planning. Then proof of stake blockchains as a base layer, they are going to inexorably anchor and use monetary services from Ethereum Classic and Bitcoin, even though if they say that they're completely secure and that they don't need it, that is a matter of their ignorance or marketing strategy because they want to inflate the value of their coins. But the reality is that physically they're going to need to anchor to Bitcoin and Ethereum Classic. Then layer 3 and layer 4 systems like wallets and rollups and channels are all going to connect to ETC to use it as a settlements layer. Governments, treasury reserves, large payments, central banks, similar for reserves, but also for real-time gross settlements between their member banks. Supranational organizations like the FMI, the IMF, excuse me, FMI is in Spanish. IMF, International Monetary Fund, they have very complex agreements between the countries that contribute, the countries that are the receivers of the money, and the loans to these countries have very complex multilateral rules and agreements. So very likely the IMF and the World Bank, etc., they are going to use smart contracts and ETC for large transfers and large loans, which are complex, and they're going to be automated on ETC. Banks, very similar to the above, treasury investment for their own treasury settlements, issue securities directly on ETC. I advise large corporations, large multinationals, and I'm already telling them to go thinking that their own books of their shareholders are going to be migrated to networks like Ethereum Classic just for the security, and they may have redundancy on Ethereum 2, for example, to move shares between buyers and sellers on a daily basis. But the large settlements and the core book is very likely going to be at the base layer on ETC, because ETC is the only one that supports that kind of smart contract. Derivatives, they're going to be like the settlements on ETC, large value transfer, and programmable loans. Like I said before with a Tesla, I'm going to receive a loan to buy a Tesla. The Tesla is going to be a transfer of an NFT from the dealer to me. But if I don't pay, then a smart contract is going to remove that NFT from my property and give it back to the dealer. And the Tesla may very well be deactivated until it start paying again. This is all the imagination of Nick Szabo in the 1990s. And this is all happening, and it's going to happen. Then multinational corporations, again, just like MicroStrategy and Tesla, they're going to buy ETC for their reserves, and they're going to use it for large value smart contracts with providers, the typical value chain thing. They're going to do shippings and hire containers and ships and export their products, and from port to port, and from storage facility to storage facility, everything is going to be ruled by smart contracts and payments on the blockchain, of which the most secure components are going to be in ETC and Bitcoin. But in ETC, the programmable side. Multinational corporations, I said, their pension plans, their payroll, cash reserves, complex smart contracts again. And then finally, small teams like startups with 5 or 6 people, and small businesses with 100 or 1,000 people. They're going to manage their capital, shareholder registries, and use it for high value dApps like the ones I described above. So that's my vision for opportunities. I would have all developers thinking, okay, everybody's thinking about ERC tokens like Shiba or NFTs, which is infrastructure that is very important in ETC. And Classic Swap, for example, is amazing, and it's very necessary at the base layer, because these exchanges have to happen in the base infrastructure as well. But everybody's thinking about these things that are the fashionable things. But if I were a developer, or an entrepreneur, I would think about these things and start to be ahead and start to think how these large entities can use ETC and start building those apps.
Yeah, that's really interesting. Love what both of you guys said. And as far as patient money is concerned, what are you thinking as far as opportunities for ETC, for projects, collaborations? What do you want to see on ETC in the ecosystem?
All right. So for those of you who are following me on Twitter, the other day I posted that it's been like a month now since I stopped looking at all my investments, because I'm preparing for certain tests and stuff, so I haven't been able to keep up. But this is what happened when I rechecked again a few days ago. I noticed that the meme coins, which constitute 5% of my portfolio, had grown to about 60% of my portfolio in a month, right? And guess what I did with most of those profits? I chopped it right down to 5%, and most of it went into ETC, Bitcoin, and Ethereum, but majority in ETC. So here's the thing: you have to have a strategy, and there are majority of the people still do not understand cryptocurrency. So for a long time to come, the cats and the dogs are going to be pumping. And so if you are in those, you happen to be in those, and you make a lot of money, don't just sit there, because it goes up, it's going to come down. But ETC I don't want to say it's a fact, but very most likely one of the most stable out there. And for the long run, that's very certain that it will go up and retain its value. So if you're taking some of these profits, put it back in ETC. And just like Angel said earlier, we need to, start making ETC popular by, building some of these meme coins on ETC. And we have to find a way to do it. Maybe, who knows, maybe ETC should have like a marketing fund where we can actually pay developers to build some of these meme coins on ETC and help popularize it, because it's all about what they call, clout, right? We have to market ETC just like every other coin is marketing itself. Otherwise, the people marketing the negative side will overcome us, and it's going to take longer to for the price to pump up.
Great thoughts. Absolutely great thoughts. And this is actually a really big issue that Ethereum Classic is going to have to work on over the next few years. The issue of the ecosystem, which is growing. And I actually love that. I know, Angel, you mentioned the new DEX that's being built on ETC Classic Swap. That's awesome. Obviously, we have NFTs, and eventually Donald, you brought up an amazing point, which is, you'll be settling pink slips on ETC. You sell your car, the title, that's like an NFT. I mean, an NFT is like that. It's they fulfill the same purpose. So super immutable, super secure. But speaking of things that might pose problems in the future instead, looking at Ethereum 1, we are able to get a glimpse of ETC's future, which is both a blessing and a curse. But it's a blessing because it gives us foresight into some problems we might face with more adoption and time. And one of those problems is bloat. But to understand bloat, you have to understand the Ethereum Classic gas system, a really interesting concept that Donald, of all people, would be perfect to explain. So Donald, can you briefly and concisely explain the ETC gas system to everyone, how it creates bloat, and how Ethereum Classic can avoid or fix the issues Ethereum 1 has run into with this?
Okay. Well, thank you for saying concisely, because sometimes I just go riffing. Okay, this is my explanation of the gas system. When you go to Bitcoin and send the transaction, you send 1 Bitcoin and you just add 0.0001 Bitcoin as a fee, and that goes to the miner. They include it in the block and goes. So Bitcoin is very simple. In the case of Ethereum, which is where the gas system was invented. Ethereum Classic and Ethereum were one before. Vitalik invented the gas system. Today, if you want to send 1 Ether, 1 ETC from one account to the other, it works more or less like Bitcoin. You put 1 ETC and then 0.0001 ETC as a fee, enter. Okay, the thing is that it's not that simple for ETC. What you're paying when you're pressing enter with that 0.0001 is gas. You're not paying for the transaction directly. You're paying for gas for the nodes to compute that transaction. So this is the explanation. It prevents the halting problem. The problem of having a decentralized network that executes software programs. Smart contracts are software programs that are copied in all the nodes of the network. Is that when you have a machine like my Mac here or a Windows machine, many times you have the little clock that going around, and it can't execute an app that you're running. For example, you're using Excel and it's very big, so sometimes it gets stuck, and you have to close the Excel and reopen it, and then it works again. Or sometimes you have to turn off your machine. Well, that is a problem that is a non-solvable problem. It's proven by Alan Turing, that you cannot solve it, and that every now and then, when you have a certain situation with a software program in the machine, is going to just not stop. It's just to continue without being able to compute. So you have to turn it off and turn it on again. Well, how do you do that in a decentralized global network like ETC? It's impossible. You're gonna call everybody, like in Solana did the other day. Hey, turn off your computers and turn them on again, because you cannot do that. So Vitalik invented the gas system, which is basically when you send a transaction, you send it with a specific amount of gas. So when all the computers around the world get the transaction and start computing it, if they used that amount of gas, they just stop. So that solved the halting problem, which is a problem in normal machines, but in this distributed computer now, which is ETC. So that's the problem that it looked to solve. 2, the gas system is like hours of human work, but for machines. So if you have a lawyer and a lawyer says, okay, I'm going to do this contract and it's going to take 8 hours, he works for 8 hours and the contract is finished, no? And then he's going to say, okay, this is the contract, I work for 8 hours and I'm going to charge you $100 per hour, so it's $800. So that's more or less how the gas system works. Each opcode in the EVM, the Ethereum virtual machine, which is a component that all the nodes have, has an arbitrarily designated amount of gas units to be executed. So to execute an ERC20 contract, it uses 65,000 gas, for example. To send one ETC from one account to the other, which is the most simple of executions, it uses only 20. It has a gas limit of 21,000. To do a Uniswap or in the future classic swap transaction, or to start a liquidity pool, etc., it uses 200,000 gas. So this is why each transaction in these networks, some cost only $5 and others cost $100, no? Because they use more gas or less gas depending on the complexity of that specific transaction and what is the smart contract that it is using. So 4, it is like having a car with a gallon of gas that can only go for 25 miles. So if you have a car and the car has the stopping problem, the halting problem, you just put X amount of gas and you know that it's going to go for 25 miles. So that is the example of that I give of how the gas system works. Just like human hours or gas have a price in the market, ETC has a price. So if you put 10 gallons of gas in your car, it has a price, say $3 per gallon, so it's $30. The same is with gas system. If you send a transaction to Classic Swap in ETC and it has and if the price is 200,000, if the gas needed is 200,000 gas and it's going to use up that, and the price is 0.001 ETC per unit of gas, then you do 200,000 by 0.001, and that's going to be the price in ETC of that transaction. So it's much more complex than Bitcoin. Bitcoin, you just put a number and that's it. The miners just accept it. ETC is more complex. So here's how it affects block size. To control block size, miners set the gas limit per block, which is now 10 million gas per block. So now ETC, you can send transactions to fill a block every 15 seconds, up to 10 million gas. So if you send total transactions that overpass 10 million gas, the miners are not going to include the excess. They're going to put it in the mempool and put it in the next block, but they're going to accept only up to 10 million. And that's an amount of megabytes of information of new transactions. So that's how the block size is also determined by the gas system. In Bitcoin, it's much simpler. It has 1 megabyte size, and that's it. If you use SegWit transactions, 2 megabytes fit, and that's it. In the case of ETC, it's not measured. The block size is not measured by megabytes. It's measured by the amount of gas that miners agreed to accept per block. That's another difference. In Bitcoin, the block size is just set by the protocol. In ETC and Ethereum, it's set by the miners. The miners can get together. They have some mechanism. I don't know how it works, but they go voting, I think, for a proposed new gas level, and they increase it. For example, ETC started, I think, with 2 million, then 4, then 8, and now it's 10 million. And the same thing happened with Ethereum. I think Ethereum, the gas limit per block is 12 million. And let me say that technically, both Ethereum 1.0 and Ethereum and ETC are exactly the same technically. So they have the same systems. The only difference is that Ethereum 1.0 is going to migrate to proof of stake, and ETC is going to stay with proof of work forever. So the higher the gas limit, the higher the block size may be, and the higher the bloat. Why? Because if you have more gas limit per block, and you receive more transactions per block, then all the nodes in the network are receiving these blocks that are bigger. Therefore, the database that is called the blockchain is growing faster. And let me also say that Bitcoin has exactly the same problem. This is something that I didn't say when we were talking with Bob last time about the technical challenges of ETC in the future and why a treasury is needed, which I think is not needed. But the problem of bloat is not only a problem of BTC, Ethereum, or an EVM chain. What happens is that Bitcoin grows slower, but they also have bloat. For example, Bitcoin has 6,000 nodes in 2014, but it was worth $1 or $2 billion, the whole network, the market cap, and now it's worth $1.2 trillion, and it has only 12,000 nodes. Why is that? Because it's not that anyone can get their computer and download Bitcoin and start running it. It's not that simple. It also has bloat. The only thing is that their block size is fixed, so and the transactions are simpler, so the growth of the blockchain in Bitcoin is slower. ETC, if it had the same activity as Ethereum, it would grow as Ethereum, no, and it would be much bigger. But both have the same problem, and it's something that many scientists are working to solve. So the problem is both miners and node operators do not have an incentive to lower the gas limit per block. They don't have an incentive to limit the block size. Therefore, they don't care much about block. This is the thing I wrote in an article. Miners, they want more fees. So if they want more fees, they get together and they increase the gas limit per block. So that's what happened in Ethereum, and they maxed it out, because on one side they want to increase the block size so they can fit more transactions, so they earn more fees. But at the same time, if the block size is too big, it's too difficult to disseminate it and to send it to the rest of the network. So they have this thing to play, but their incentive is for the block to be as big as possible. They don't care about bloat. They don't care if there's 1,000 nodes or 100,000 nodes in the network. And the same thing goes with the current existing big node operators. For example, Binance, Kraken, Coinbase, all those guys, they have huge computers, and they already are running the nodes. They're receiving the new blocks, and in a way, they prefer the blockchain to be bloated, because the more bloated it is, the less nodes they are, and the more unique they are, and the more they protect their business. And if there were no bloat and anybody could run a node, then anybody would have nodes in their computers, and they wouldn't use them as the messaging system into the network. So I think that in economic incentives, both by existing node operators, especially the big ones, and miners, is to just keep growing the block size, and that grows bloat. That creates a bloat problem. So it has to be decided at the developer level, not as a negotiation, I think, with miners. Just like Bitcoin. They said, okay, it's 1 megabyte. That's it. I don't care what miners think. And in fact, there was a war about this. Miners wanted a bigger block to include more transactions in 2017, and there was a war, and that's how Bitcoin Cash was created, as a fork of Bitcoin that has much bigger blocks, but it's very small compared to Bitcoin. And Bitcoin, the larger Bitcoin community and the maxis prevail, and they have a fixed block, precisely to control bloat. So one solution I put here, number 9, is to set a hard gas limit per block. I think that we have to take away from the miners this thing that Vital created, that they decide the block size. I think it has to be fixed. For example, I would fix it at 4 million gas limit per block, or 8 million, something like that, but just leave it there fixed forever. The other is, bueno, despite I am part of groups that we're thinking how to compensate for node operators, because of the 400 nodes in ETC, many are exchanges, others are miners, a few of them are also wallets, and regular people are not running ETC nodes, nor Bitcoin nodes, nor Ethereum nodes, because they're big and it takes a long time to download and all that, and it makes your machine very slow. But what if there's a mechanism to pay node operators? In that sense, a lot more people would be willing to buy a machine, for example, just to run a node to get the revenue. And also this would solve the thing of running nodes in places where there's political conflict or war and stuff like that, no? Because there is a compensation, there would be more people willing to run the risk of running nodes. The other solution is what we spoke with Bob, for teams and for scientists to see if there's new compression technology, some way of, with the same transactions, making the blocks smaller. And the last solution, which more or less exists today, is to have different types of nodes. No, you have an archival node, which it receives all the transactions and all the blocks and has all the data, and those are huge. In the case of Ethereum, they're terabytes. Of the blockchain is the size is terabytes. Then you have medium nodes, which is basically the same guys, but they don't keep the transactions. They throw away the transactions and they only keep the block headers and the Merkle tree. You can Google what is that, the Merkle tree of all the transactions. So it's much smaller. I think it's like 1/5 the size of archival nodes. And then you have a third kind of node, which is the very light node that they don't even keep the Merkle tree of all the transactions, but they only keep the block headers. And with that information, they know that they are in the right chain. And whenever they want to check a transaction, if it's inside the blockchain, they check with other nodes. So those are light clients. So creating these categories of nodes, maybe a mix of this category, a correct mix, could create a situation where we have more nodes, but and more participation, but with a high level of security.
So basically, from what I got from that, I think you mentioned 4 different ways that Ethereum Classic is going to possibly be able to solve this, which are compensating node operators, fixing the node size, doing research into new compression technology, and implementing a division of labor style concept on the variety of types of nodes.
Yes.
So we had a couple other roundtable questions that we were going to get to, but right now let's actually open this up for questions from the audience. We've had so much awesome engagement. So if you guys have any questions, leave them in the chat right now. I know one person asked where the best place is to reach you, Donald. That would be your Twitter, correct?
Yes, at ETC Logic.
And let's see what we got. Anyone else have any questions? I know there were some earlier. Here's a beautiful one. So Big Money Beetlejuice, our favorite, account on Twitter, says, if I make an ETC inspired Speedo set, will you, Donald, and the other panelists wear them with me and do a live where we all talk ETC in our Speedos?
Yes, I would do it.
All right, so we've all agreed to wear some green ETC Speedos. So you're in charge. Big Money Beetlejuice, you're in charge of making those and hooking us up. Seriously. Anything else here?
You put the ETC logo in each cheek in the back.
Oh my goodness gracious. What are you going to put in the front? Anyways.
A big green candle.
Oh my goodness gracious. Does anyone know how much coins Donald owns? I know you're public with this. That's why I put it up on the screen. Do you want to let the audience know?
Yes, I have 660 coins, and that's all my wealth. And I have a hot wallet with more coins, but those are used for daily expenses and stuff like that.
Perfect. And here's another one. I mean, everyone knows this already. As far as, well, not everyone. Like 95% of the people in this chat know this, but Fred has not been here. Fred's new here. So Donald, what's your end of year prediction?
Can I share my screen again
Go ahead.
to answer? Because I put two charts here.
We'll take
I think that the explanation that can you see my screen?
Yes.
The explanation that Angel gave, Savage Profits gave, is perfect. The analogy of Bitcoin in 2013, the analogy of Bitcoin in 2017, that it went 20 times from the beginning of the year till the end of the year. So we already know that it's absolutely possible to go up 20x at the end of the year for crypto, and we're all looking at the dog and the cat coins and how they're going up even more than 20x in very little time. So we still have all of November and all of December, 4 weeks and 4 weeks, and so that's like 8 years. No, each week is like a year in crypto time. So we have plenty of time for ETC to go to 1,000. I just wanted to say that this activity here, this red candle the other day to 42 was super fake. I did a video about that. It's obvious for me that they're whales playing to see where they can take the market to buy more ETC, and then it goes up and they make a bunch of money. And then here it's obvious that yesterday I fell for this. It was a bull trap. The whales, you see that it's more or less the same volume. They come, they buy 1 million or 500,000, and then they make everybody else margin calls. So the whales, I think this is good. The more speculation and then the more activity there is in ETC, it means that it is alive. And like Savage showed, $1.7 billion in volume. It goes against this thing of the zombie chain and stuff like that. So this is.
Go ahead. Sorry.
So this is what happened this year. We went again. Before this, it was at 4 or 5, and it went to 180. And this is going to happen from here until the end of the year, in the next 8 weeks. This same thing is going to happen, but because we're going to be closer to Ethereum moving to proof of stake, and when you see the list of the proof of work coins, it's Bitcoin, Ethereum 1, Litecoin, Dogecoin, Bcash, and ETC. People are going to realize it's going to be material. No, this is something psychological. Many times until things don't happen, people don't realize them. Especially now that we're so distracted with dog and cat coins. But when it moves, of the list of the top proof of work coins, everybody's going to realize that ETC is the only programmable one, much more useful than Dogecoin, Bitcoin Cash, and Litecoin. Not only that, sometimes it has the same or more transactions, more activity than those coins, and it's programmable. So I think that ETC is not going to have only this boost to 180 to 200, but it's also going to have the additional boost that people are going to realize that it's programmable and much more valuable. And there's another psychological thing, and that is that when we get to 200, then it's much easier to think about 1,000. For now, it seems so far away that a lot of people are scared, and they say, no, it's going to go to only 100 or only 200. No, that's conservative. I am being civilized or realistic. But the thing is that all the realistics, when we are at 180 and 200, they're all going to say 1,000 because it's realistic from there.
I want to put an input on that before I head out because it's getting quite late. Actually, let me share my screen. So everybody has these predictions, right, of Bitcoin hitting $100,000 by year's end, 90,000, 80,000. And then you got a Plan B model of Bitcoin hitting $135,000. And where does this come? Now, people are expecting rallies November and December. And if you know how Bitcoin works, it trades off of people's emotions, which is why historically September is known to be a very bad month. And it has negative returns year by year, every September. In the stock market as well, the same thing happens. Now, if everybody's sentiment and mindset says, wow, November and December, every halving cycle, we see a rally, it's going to continue historically, because historically Bitcoin rallies till December and drops off near January, where people start collecting profits. So that's pretty much what drives retail to buy. And this year is when we have the institutional investors, now that ETFs are being allowed for futures, as well as a spot ETF near approval in Australia. Now that we have that extra money moving forward, it seems this year our rally is only going to get much more massive than the previous cycles because of that, and because of crypto's adoption lately. So there is the prediction of Ethereum Classic reaching the 200, 250. Because if Bitcoin does hit 100,000, is Ethereum Classic seriously going to stay at $50? Let's be real. At the very least, they're going to get some sort of that market share, which is going to boost them way higher than its current price points at the moment.
I agree.
Totally agree with that. Totally agree with that. You have to go right now, right?
Yeah.
Okay, so let's actually just close out. Let's conclude everything. Thank you guys for all your questions. I think we should do like an AMA at some point, like where we just do questions, because honestly, there's just too many. We can be going all day, because the more we ask, the more questions come in. So, would you guys want to give like a concluding statement and your Bitcoin price prediction by the end of this cycle as well?
I see Bitcoin hitting 100,000 by year's end. It seems we're following the stock to flow model. ETC, I still have that $250 price point prediction. But now that everybody is expecting ETC to hit 250, we're either going to break out towards 1,000, or since everybody's expecting it to hit 250, I feel like people are going to start selling off at 230, 220 to collect those initial profits, and it might create a chain effect. So at the very least, a 4x from today's current price points is foreseeable.
So they'll be collecting those savage profits, you mean? I understand.
Yeah.
And, and Donald.
I think that Bitcoin is going to 125,000, Ethereum to 10,000, and that ETC is going to do at least that, which is a 3 or 4x. But when we are at 4x, it's going to shoot higher to 1,000. And I think that in this cycle, both Ethereum and Bitcoin, because there's much more adoption, like Angel says, that it's not going to crash. Then it's going to, there are going to be corrections, like there's always corrections, but it's not going to be an 80 or 90% correction. It wouldn't surprise me that it's a 20 to 30% correction. So that's my thing. And I want to emphasize also that in terms of opportunities to create NFT technologies, NFT markets, and to create Classic Swap, for example, and other decentralized exchanges and that kind of infrastructure is it's an enormous opportunity in Ethereum Classic for whoever creates those protocols, because they are going to be extremely useful, like I explained before, for the future use cases of ETC as a base layer.
And before we go, I just want to say thank you to everyone who watched. We all really put a lot into this episode, and I know we all appreciate your support. And I also want to thank Angel, Cal, Donald, Selorm for preparing and putting all that work into this for the community. And lastly, I want to encourage the ETC Army. Go back to the beginning of this episode, and you'll see Angel give a price update for today, October 31st, 2021. Just remember that price for next month's episode, because all signs indicate that this market is about to heat up. And I was going to share my screen and show a couple charts and stuff, but I guess I'll save that for next time, because we really went over time. Sorry about that, guys, for anyone who was in a rush. But to be honest, that really poses a great opportunity for ETC, because when alt season begins and everyone is looking up the best cryptocurrencies, the people on this very channel and others have made sure that those people, those future members of the ETC Army looking for the best altcoins, will find a market flooded with content about Ethereum Classic. To the supporters, thank you for being here. To the trolls, thank you for the engagement, and have a happy Halloween, everyone. We'll see you next month.
Thank you very much, Peter.
See you.